Hello and welcome to an FXTimes daily market recap. I'm your fundamental market analyst, Nick Nassad. Today is Tuesday, February 2nd, 2010. We begin today's broadcast with a look at the Reserve Bank of Australia, which held its interest rate overnight and surprised the markets by keeping rates at the 3.75% when expectations had been for a 25 basis point hike. The decision comes after we've had 3 successive increases, but it shows that the central bank would rather support the economy's acceleration than deal with inflation. Also, it says that it needs time to assess the effects of the past 3 rate rises in late 2009, as well as the hefty increases in bank lending margins. For instance, news showed recently that borrowing for homes fell to a 5-year low in December as mortgages have increased by 1% since October. The bank did say that it would resume its tightening policy if the economy grows as expected, but it could signal that the future rate hikes might be a bit more gradual and spaced out compared to the rapid 3 rises we saw to end 2009. Taking a look at the Australian dollar-US dollar pair, we see that following a rally in yesterday's session in favor of the Aussie, we had a sharp slide in the wake of the surprise RBA decision. We fell to a new fresh 6-week low in the pair at 0.8778. However, that we did find some support here, which was also support that we saw in Monday's session, and we've been rallying in New York trading and currently testing the 50-period moving average. If we look at our high from overnight, we see that this was a level of support in last week, but now it has turned to a level of resistance. So that's around the 89.25 area, between 89.50 and 89.25 area. The Aussie has been sliding in the past few weeks as China ramps up its attempts to stem the growth in its economy because it's afraid of overheating the economy and therefore boosting inflation, and so we've seen this precipitous slide since mid-January. We'll see if today's RBA announcement means that we're going to fall further down, or if we find some kind of support here at our low from today. So that's an important level to watch for the downside action, while our resistance now is established from yesterday's high. In a look at the euro-dollar pair, we see that the greenback was weaker in today's trading, with the euro moving above the 1.3950 level. The euro got some support after spreads between 10-year Greek government bonds and similar German securities narrowed on speculation that the European Commission will endorse Greece's plan to reduce its deficit. The verdict on that will come in tomorrow's European session. Greece is currently running a budget shortfall close to 13% of GDP, but it has outlined spending cuts and measures to boost tax revenue, which it says will slash the budget deficit to 3% of GDP by 2012. So right now it is waiting on the European Commission to agree to that budget proposal. However, as we have some very important fundamental releases coming out at the end of the week, trading may be confined to some tight ranges during the middle of the week. Those key releases include Thursday's ECB monetary policy decision as well as Friday's U.S. non-farm payroll report. The greenback was also weaker against the yen, as we saw some falling U.S. Treasury yields, and lower U.S. yields make the greenback more attractive for investors who want to use it as a funding currency to buy riskier assets or as a funding currency for carry trade, and usually that role is traditionally held by the yen. So when risk appetite is going up, the yen, let's say against the Aussie or pound, would weaken, but here when we pit the two funding currencies against each other, with the U.S. Treasury yields lowering, the pair is actually moving in favor of the yen and against the greenback. But if we take a look at this pair, we see that we do have a bit of a upward sloping support level, and now we have a bit of a horizontal resistance level around 90.90, and this is a bit of a consolidation pattern, and we'll see where we go from here. Taking a look at the US dollar Canadian dollar pair, another pair that's very sensitive to growth concerns and commodity prices, we see that the Canadian dollar has been gaining the last 2 sessions after it tested this high here near 1.0720. Now this resistance goes back, today's low came close to testing our support from last week's trading here around 1.0550, though we didn't actually reach it. Right? Meanwhile, this resistance here around 1.0720, if we zoom back, we see that it's the highest we had been since December 18th, and there's been several times that we broached this 1.07 level, but we were unable to sustain gains past that. So we'll see if this level acts as resistance in a more medium term, or and what happens here at support around 1.0560. The U.S. fundamental docket was rather quiet today, with only one main release, pending home sales for the month of December. The gauge tries to forecast existing home sales in the future and rose by 1%, a signal that the housing market may be steadying after we saw some sharp swings as a result of a government tax credit. The index was expected to be flat, so the reading was better than expected, and it follows a very sharp 16% decline in November. That plunge followed strong incentives by the government, which was due to run out November 30th, but that tax credit was extended and expanded through April of 2010. In 2009 overall, the housing market has been boosted by the tax credit as well as low prices and low mortgage rates, but on the downside, it's being pressured by high unemployment and difficulty in home buyers getting loans. Now let's take a look at some upcoming fundamental releases. Tonight, Australia posts data on its services sector as well as its trade balance, while the UK releases data on consumer confidence and its BRC shop price index. In the European session, the UK releases its services PMI, and the Eurozone posts its final version, and as well it will post the Eurozone will also post its retail sales. Also to keep an eye out will be what happens with the situation regarding the Greek budget proposal. Tomorrow, again, the docket is relatively light with only 2 U.S. releases, but they're both rather important as we have the ADP employment change for the month of January, as well as the ISM non-manufacturing index, which is a measure of the services sector in the U.S. Tomorrow afternoon, New Zealand will post its employment change for the 4th quarter. And that will wrap up our daily market recap. For more news, videos, and analysis, please visit our site FXTimes.com. I want to thank you for watching and wish you good trading.